This video reviews Hitachi's second quarter financial results for FY 2025 from April to September 2025. Hitachi was originally known as an electrical products company and now operates across information technology, energy systems, industrial equipment, and infrastructure while focusing on digital solutions and social innovation. Hitachi also develops and expands its Lumada business, which provides data-driven and AI-supported solutions to improve efficiency and create new value for customers. In the second quarter summary, Hitachi's overall performance was very strong, with continued momentum across major businesses. Revenue increased by 8% year-on-year, driven mainly by solid growth in the digital systems and services, especially the Japanese IT business, and strong demand in the energy segment's power grids business. Adjusted EBITDA reached a record high for a second quarter. EBITDA is core operating profit before interest, taxes, and amortization. Net income rose sharply by 2.4 times, mainly because Hitachi recorded gains from transferring its share in the UK-based joint venture Johnson Controls Hitachi Air Conditioning Holding to Bosch. Core free cash flow also improved significantly, supported by higher profits at Hitachi Energy and other businesses. Overall, Hitachi demonstrated strong operational performance, improved profitability, and a healthier cash flow position. Net income progress rate is already 63%, and the performance was very strong. Hitachi organizes its business into four main segments: Digital Systems and Services segment, Energy segment, Mobility segment, and Connective Industries segment. In the second quarter, Digital Systems and Services segment and also Energy segment showed strong momentum. Digital Systems and Services segment focuses on IT solutions, digital transformation, and Lumada-based services that support industries and governments with data, cloud, and AI. DSS continued to perform well, with solid results in Japan, driven by demand for digital transformation and modernization projects, though overseas revenue was revised downward due to restrained customer investment. Nevertheless, profitability was maintained through cost reductions, including in the storage business. Energy segment covers power generation, transmission, and grid systems, providing technology to support renewable energy and stable electricity supply. Energy segment showed strong growth, especially in power grids, where global demand for transmission upgrades and renewable energy connections boosted both revenue and earnings, leading to an upward revision for the full-year forecast. Mobility segment develops and maintains railway systems, including trains, signaling, and control solutions, supporting safe and efficient transportation infrastructure, with clients including JR East and JR West. Mobility saw stable revenue growth, but profit remained flat due to increased PMI, post-merger integration-related costs, although FX effects supported an upward revision. Connective Industries segment offers products and solutions that support factories and cities in improving productivity and sustainability. Connective Industries reported mostly flat revenue, as weakness in China's elevator-escalator market offset strong demand for semiconductor equipment. But profitability increased, and the full-year forecast was revised slightly upward. Corporate items and eliminations improved as some previously assumed risks and tariff impacts were revised downward, leading to a positive adjustment in both revenue and adjusted EBITDA. DSS, Digital Systems and Services, is Hitachi's core business segment. The Japan side front business continued its strong momentum because demand increased for digital transformation and modernization projects across financial institutions, utilities, the public sector, transportation, and defense, which led to the highest ever second quarter revenue and profit. The temporary drop seen in the first quarter due to last year's large ATM-related orders recovered fully in the second quarter. Orders continued growing, and productivity improved through the use of generative AI and agentic AI. The storage business continued facing restrained investment from Europe and the US, but profitability improved through margin enhancements, disciplined deal control, and cost reductions. GlobalLogic's utilization rates improved, even though customer investments remained soft. Digital Systems and Services segment overall had solid growth and will continue cost optimization, structural reforms, and expansion of DX and modernization services. Hitachi is moving forward with key initiatives to raise its enterprise value, investing in M&A to grow Lumada and physical AI, and expanding its technology and service capabilities worldwide. And Hitachi completed a capital reorganization and the HVAC, heating, ventilation, and air conditioning joint venture restructuring with Bosch, generating a significant financial gain, while the newly acquired Shimizu factory will support HMAX solutions for green buildings and data centers. Additionally, Hitachi is also carrying out its 500 billion yen shareholder return plan, and more than half of the planned 300 billion yen share buyback was finished by September. Hitachi revised its full-year FY2025 outlook upward after strong first-half performance. Revenue is now expected to increase by 200 billion yen compared with the previous forecast, with adjusted EBITDA raised by 100 billion yen and net income by 40 billion yen. The upgrades reflect strong momentum in the energy business, especially power grids, as well as improvements in mobility and connective industries. Even with increased strategic investments, Hitachi expects continued revenue and profit growth, driven by expansion in energy, DSS, and mobility. Hitachi's Lumada is a digital platform and solution suite that leverages data, AI, and advanced analytics to improve efficiency and accelerate digital transformation. GlobalLogic, a US-based digital engineering company and now a wholly owned Hitachi subsidiary, plays a central role in expanding Lumada by enhancing AI capabilities and creating synergies across segments such as energy, mobility, and connective industries. GlobalLogic supports Hitachi Energy by expanding cloud enablement and asset management tools, drives the rollout of HMAX in the rail signaling business, and helps transform the building solutions business into service models. HMAX, or Hypermobility Asset Expert, is Hitachi Rail's AI-powered platform for optimizing train and infrastructure maintenance. Additionally, Hitachi acquired Sinvert, a Germany-based data and AI consulting firm with expertise in AI-driven business design, data governance, and integration. Sinvert will be integrated with GlobalLogic to accelerate advanced AI developments, including agentic AI and physical AI, and support the global expansion of the HMAX business. Lumada business experienced stagnation for a while, but in the second quarter, revenue increased significantly across all business sectors, rising 32% year-on-year overall. Lumada's contribution to total Hitachi revenue increased to 42%. Hitachi's initiatives to expand the Lumada business include strengthening collaboration with partners and accelerating internal AI deployment. Hitachi is strengthening AI and digital capabilities through strategic partnerships with NVIDIA, Google Cloud, and OpenAI to build next-generation AI infrastructure and develop physical AI solutions. Hitachi is accelerating internal AI deployment through its Customer Zero approach, using its own operations as testbeds for new AI solutions. Several newly developed AI systems are highlighted, including a risk prediction safety solution, a real-time AI guidance tool for building maintenance, and ultra-low-power edge AI technology. These initiatives aim to broaden Lumada use cases and enhance value creation across Hitachi's industrial and social infrastructure businesses. Stock price. This chart over the past year shows the stock price in Japanese yen at 4,710 as of November 21. This chart shows the stock price in US dollars at 30.45 as of November 21. The U.S. stock price has experienced significant fluctuations at times due to a stock split. The stock has been rising in the long term, but recently it has fallen slightly, partly affected by the recent volatility in AI-related stocks. Current PBR is 3.49 and PER is 28.5. Dividend yield is 0.91% when it is calculated by previous dividend amounts, since dividend forecast is not disclosed yet. Compared with past PBR, PER, and dividend yield, the current stock price is relatively high, reflecting strong market expectations. Hitachi is considered one of the promising stocks because it is involved in Japan's defense sector, as well as AI and digital transformation businesses. Conclusion. Second quarter results were strong with solid revenue growth and record-level profitability. Performance was supported by continued strength in digital systems and services, especially in Japan, and by robust global demand in the energy segment's power grids business. Hitachi raised its full-year outlook as momentum remains firm across energy, DSS, mobility, and connective industries. Hitachi is also accelerating digital and AI initiatives, expanding Lumada, and enhancing enterprise value through strategic investments and shareholder returns.